Hello, good day, guys. My name is Nick, Technical Analyst of SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the Great British Pound to the Japanese Yen. And as usual, we will be talking about fundamental analysis before we move right down ahead to technical analysis, which is purely what we're going to be seeing on the chart. We have noticed that Great British Pound Japanese Yen has picked up beats to poke monthly high up to for the third consecutive day. And also receding fears of the Russia-Ukraine war joins firmer U.S. Treasury yields to favor the bulls. And of course, hopes of a firmer UK data, BOE's rate hike, keep buyers hopeful ahead of February's job report. And as we can see, GBP JPY rises to the highest level since March and up about 0.5%. Intraday around 154.40 heading into Tuesday's London Open. In doing so, the yen cross-prints a three-day uptrend amid firmer U.S. Treasury yields and cautious optimism in the market ahead of the UK's monthly employment data. Now, the U.S. 10-year Treasury yields rose to a fresh high since June 2019. Checking our monthly time frame, and of course, we can see a confirmation of this. And the U.S. 10-year Treasury yields has latest retreat to about 2.14%. The 5-year coupon, on the other hand, has refreshed a 34-month high ahead of stepping back to 2.09% at the latest. While the UST bonds yields portray the market's firm belief that the Fed will rush for faster monetary policy, tightening stock futures in the US and Europe also printed mild gains amid expectation that Ukraine will have peace with Russia by May. Also adding to the market's cautious optimism is the restart of the diplomatic negotiations that were halted abruptly the previous day. On the contrary to this, we can notice that escalating COVID wars in China and Russia's headlines to achieve all goods in full may test the GBP JPY buyers, of course. And it's worth noting that a trader's view of a 0.25% rate hike by BOE Bank of England also underpins the peers run-up, as per the latest reading of the CME's Bull Watch to 100% probability, of course, is favoring such a move. Now, for immediate directions, UK claimant count change for February and the ILO employment rate for 3 months to January will be very crucial, of course. However, risk catalysts gain major attention when it comes to our yen peers. Now, purely what we're seeing on the chart, our technical analysis, we see a clear upside breakup of a 5-week old trend around the 153.70 zone by the press time, and directs GBP JPY bias towards the 50 DMA level, so around the 155.20. And additional important levels, we see today's price began at 154.42 and a total daily change of 0.49% and total daily open at 153.66. Trends of our daily SMA, we have it at 154.3. And for our daily SMA 50, we have it at 155.22. And our daily SMA 100, we have it at 154.08. And our daily SMA 200, we have it at 153.34. And of course, we have levels previous daily highs at 154.19. And we have the previous daily lows at 152.92. We have our previous weekly high at 153.4. Our previous weekly lows at 150.99. And previous monthly high at 158.05. Now, our daily Fibonacci, we have it at 153.71, 38.2%. And our daily Fibonacci 61.8%, we have it at 153.4. And daily pivot point S1, we have it at 152.99. Daily pivot point S2, we have it at 152.31. Daily pivot point S3, we have it at 151.71. Daily pivot point R1, we have it at 154.26. And the rest of the progression goes like that. So what we're projecting from this, if we're to make an entry to this trade at this point, we are leaving it to run to the most recent support. We have resistance, this is about 70 pips, and then most likely push up back to the upside. So making a trade run to this point, we are looking about nothing less than 70 pips from this trade, which is good money. And then a return back to this main point at this resistance here at 153.478 for reversal. That's our technical analysis on today's currency pair, the Great British Pound to the Japanese Yen. I remain your host, Nick. Bye for now.